Hey everybody, Broker Nicholas Eniti here with the Eniti Realty Group. Just wanted to talk a little bit about some questions that I've been getting a lot from clients and other folks, basically about how is the market, and the next economic slowdown. And typically, the first of the month I usually do kind of where we're at with the San Diego housing market and Point Loma and things like that. Just to let you know, our inventory is still obviously low. We're seeing a little bit of a slowdown at price points at about 1.3 and above. Some things are starting to cool just a little bit. But really today what I want to talk about is a little bit more of a macro view about what's going to be happening over the next 18 months or so, leading up into 2020. And I've recently had the chance to listen to a guy by the name of Steve Harney with Keeping Current Matters. Guy is brilliant. They kind of call him the Oracle. He basically compiled a lot of his firm's research along with some research conducted by the Wall Street Journal and also by the Z Report, and kind of put out an economic forecast for the next 18 months or so. And basically what we're looking at is the expansion from 2009, which is the second largest expansion in our nation's history, is probably going to be coming to an end somewhere around 2020, right? Basically the Feds are going to be raising rates to kind of cool off the market a little bit, and that may lead us to some type of recession or maybe really just kind of more accurately a normalization of the market, right? Realize that recessions are not necessarily a crash, right? But they're also very hard to predict, right? People said in 2011 we were going to have a recession, in 2016 we were going to have a recession, and both times they turned out to be wrong, okay? So what I want you guys to realize though is, we will probably have a normalization of the market. However, that doesn't mean we're going to have a housing crisis, okay? What happened back in 2008 and how those mortgages and things were sourced is not going to happen again, right? What we're going to see now is a little bit of a different slowdown. And basically, when the Wall Street Journal looked at what was going on, they talked to a lot of leading economists, and they basically said that there's going to be several triggers, but the first three key triggers are going to be monetary policy, trade policy, and stock market correction, okay? When it came to the housing market, it was actually number 9, okay? So probably not going to be affected too much. When they looked at, price appreciation in 2018, we're looking at about 5.8, 2019, 4.2, in 2020, 2021, and 2022, we're still looking at appreciation of around 3%, which is historically normal. That's basically going to kind of, track with inflation for the most part. But just realize over those next 5 years, no one is calling for depreciation, right? They're not anticipating that housing prices are going to go down. A lot of people are starting to see a little bit of this slowdown in the higher market right now, and they're thinking, oh, we're ready for this correction. We're going to see these prices starting to come down. That may or may not be true, right? And realize too, when we talk about rising interest rates and things like that, nobody has a crystal ball, so we're not quite sure. We're just looking at the leading indicators right now that we have, okay? So just realize, even though we're going to have this normalization over the next 18 months, it's not going to be 2006 all over again, okay? Even looking at the Z Report, the Z Report's come out and said basically that housing values and volume are really going to weather the storm, right? It's not going to be a huge thing. Even if you look at the past 6 recessions, by the way, the last recession, okay, we definitely saw housing prices get corrected because it was the housing market that caused the recession, right? However, the 5 recessions before that, housing prices actually went up, okay? And in 4 of those cases, they went up in double digits. A couple of other things I wrote down, just realize, as far as our loan starts, how we're generating loans, right? Those, the restrictions or the criteria are still twice as stringent as they were historically. I'm talking back to 2002, 2003, and beyond there, okay? Foreclosure starts, we're still at like half of the foreclosures we've had historically back in 2002, 2003. I'm discounting 2006 and everything because those were kind of extraordinary circumstances, right? But affordability on the macro side of things is still very low, and interest rates are still very low, right? And they're going to continue to rise, right? We know that. So also realize too, lots of people always say, and this is kind of conventional wisdom, that as interest rates go up, prices typically come down, right? Because you start to reduce buying power. However, the rates have gone up 6 times in an appreciable measure over the past 30 years, and in all 6 of those instances, home prices actually went up with the rise, right? And there's a couple of reasons for that. First of all, there was a lot of pent-up demand. People were sitting on the fence, kind of wondering what was going to go on, and as rates went up, they realized they were going to get priced out, so they jumped into the market, right? So we actually had a lot more buyer activity going on, which actually helped to spur those prices. So the moral of the story is we probably are going to see a more normalization over the next 18 months. That means basically the days of the real estate agent, putting a listing in the MLS, hitting enter, and getting 6 offers in one day, it's probably going to be coming to an end right over the next 18 months. What we're probably going to start to see is things are going to take 60 or 90 days to sell, which is what historically things, that's a normal market. So we're headed back to a normal market, probably not going to see too much of a price correction. We will start to see pricing slow down, right? We're not going to see things climbing like they have been, right? But they'll still continue to go up. And just realize right now, if you're wondering, God, is this still a time to buy if we're going to be heading into the slowdown? It absolutely is, because the rates are still low. So anyway, just wanted to provide this information with you. If you guys have questions about this, if you'd like links to the actual studies, where I got the data and stuff like that, more than happy to have that conversation with you. If you have questions about what's going on in your neighborhood, specifically, Point Loma, Ocean Beach, and wondering what's going on with the value of your home, I'd love to have that conversation with you as well. Just give me a call, shoot me an email, send me a text, whatever it is. And that's about it. Thanks so much for tuning in. And remember, who you choose to negotiate for you absolutely matters.